The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman here on this 5th day of November. My pleasure to be here, noon to 1 p.m. Eastern Time, TFNN. And of course, it is a really important session because tomorrow we have the elections. The more work I did over the weekend, the greater I saw the chance that if there is even just a relief for let's call it the stock market. In other words, if whatever transpires into the evening and then after 9 p.m., if the market takes it as it's okay, it's not quite what we wanted, but it's okay. The way the market acted last week with that really big 1,400-point move to the upside, and then a very vicious turnaround on Friday, says to me that in the shorter term, there are a lot of investors that want to go long and that they've been buying. There was also a vicious short squeeze. But at the same time, if you look at the market on a weekly basis or even a monthly basis, it says, you know, even if there's a rally, we should be doing some testing. In the Dow's case, it should be testing in the 24,000s. My target has been a retest of the 23,300 level if certain factors come into play. I'm going to wait until Wednesday to see whether those factors come into play. It doesn't say when, but it would imply that it's going to be within, the couple of weeks, within the next few weeks. But what's really important about this is one chart that I sent to my subscribers to my opening call newsletter. And of course, just to give you just a brief update, we're looking at the Dow now up 141 at 25,413. It went from 24,122 on the 29th of October, zooming up in one leg. It could be a peak today if there's no new recovery high, above 25,578, but even holding above the 14-period moving average and the 9-period moving average right now is a good sign. That weekly chart, you can see the technicals are terribly weak, but you know that from history, we know that the weekly chart is a sandwich. When things are looking good, it gets better and better and better. When things really turn down, it takes a long time to recover. So you have to look at the outer, the sandwich. You have to look at the bread on the left, that's the daily, and the bread on the right, which is the monthly, to get the bologna in the middle. All right, let's get a move on here because there's a lot to do. In the S&P, so parameters to watch going into tomorrow night and Wednesday will be a close below 25,000, especially below 24,800, which suggests we've got that arch formation, the lowercase h, and then we have to do quite a bit of retesting before the market can really garner strength. But we've already had what might turn out to be the internal low. Now we're waiting for some kind of residual low. On the upside, any close above 25,650 between today and let's make it Wednesday, because if it's today, we could get that ripped apart tomorrow. But if it's by Wednesday, I would have to say that this particular chart that I showed my subscribers, let me get to this. I believe it's this. I hope it's this one. You never know. I've got so many charts, of course. No. Well, this one shows that the very long-term daily chart has held the low of 2016 absolutely beautifully into last week and rallied strongly. Obviously, that's not the chart that I was. Wait a minute, wait. That could have been the chart. Doesn't matter. I'm going to show you some other chart now if I can ever find it. Oh, here it is. I think it's this one right here. There it is. So in this particular chart, it can come up. Come on, you. Okay. Well, look at this. It's a real simple thing. Actually, I only did it 3 times because I didn't want to get too carried There we are. Let me do it 3 times. I did it twice. I should have done it 3 times. If you're looking at this particular chart, you'll see using this particular, it's like a histogram in the why is this not working? That's all I needed right now, huh? Is there a problem? Okay. Not working, but you see these yellow circles with the yellow low. You see the 3 in the automated Chapman wave support levels. You see 21,048, 23,915, 24,068. Those were all tremendous support levels back in July. And boom, that was a turnaround in the histogram. And look at this fabulous move. Look at this turnaround here from this little double bottom low with so many support levels, 24,370 on the Dow, 24,147, 23,911. And where did we go? We went to 24,122, right in the middle. And we've taken off really nicely. It has 26,254 as a very strong resistance, but that is a nice takeoff. All right, enough with that. Let's get back to our story. If I can actually get this to work, there you go. Okay, so those are the parameters. Now we're going to go to the S&P. S&P trading right now at 2728, up about 4.5, 5 points, holding the 9-period moving average, struggling at the 14-period moving, not nearly as strong as the Dow. Most importantly, the MACD did cross positive, just like the Dows did. The Dow did. Gosh, this is not working here. Uh-oh, that could be a problem. Well, we'll deal with that. Nothing to worry about. We got plenty of charts. And the MACD has crossed positive from way, way lower, and the stochastics at about 55%. Not great, but it's okay. That weekly chart is still very negative, and both the Dow and the S&P. What happens in November is going to be absolutely critical because the S&P has already made a peak E. The Dow is still in that leg with a high and a low, so it needs a whole month to make a lower high. Most importantly, the parameters to watch are 2683 on the S&P and on the downside, and 2783 on the upside, and that'll be upside will be very positive, downside will be negative. QQQ, NDX 100, here we go, down $1.71. Really weak. Apple's down, a number of the important FANG stocks are not doing all that well. Look at this. You go to the 200-period moving average, the orange line, and boom, you get repelled. So the S&P, the Dow's strong, the daily S&P is okay. The QQQs, the Index 100, Invesco Trust Series, not good. Weekly chart, not good. Monthly chart, not that good. All right, IWM, we're getting this done quicker than I thought. IWM is down 66 cents. Had a real nice day on Friday because the others tanked, but it held the 14-period moving average Thursday, Friday, and today. That's good. They are way oversold. They can have a bit more of a bounce. The technicals are quite good. At 153.37, a break under 151.30 says, uh-oh, little problem here. A break into the 155.70 says, nice action, and that'll help the weekly chart. Let's go to gold as we go to our first break, and gold is trading right now down 2.5 at 1231.1. It's in a consolidation phase. The weekly chart is holding okay. It's not great. The monthly chart is not good, and I do want to do the silver as we go to the break. Basil Chapman, Tiger Conditions Hour, Dow's up 144.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
All right, we're back. So during the break, I had a couple of questions. I'll just do them now because these particular stocks are already part and parcel of what we're looking at here. So the question is Apple. Apple, I think about 2 weeks ago, I said there's a lot of evidence suggesting that Apple is about to make a hat-trick top. The daily gave a peak F top at about 232. The weekly made a peak F top in the Chapman Wave. That was back in, I think, October the 1st or so. What was the exact price? 232? 233.47, the week of the 5th of October, 233.47, and this 233.47 is a leg D in the monthly chart. We have to wait all of November to find out if it's going to be a peak. It's sitting right now on the green 9-period exponential moving average in the monthly chart. First time it's done that since back in, I think it was maybe August of 2016, or maybe September. This is very important. I do believe that Apple is in the process of making a hat-trick top, meaning the daily's given the sell signal into sell mode, weekly gave a sell signal to sell mode, and the monthly hasn't yet even given a sell signal, but it is real close. If it gives a sell signal, that'll probably be at about 190, below 195 in the monthly chart. Well, I need the MACD to cross below the, so it needs to be negative, and the stochastics at 88. Let me do it this way. A close below 188 in November, at the end of November, for Apple will be a very big negative. Then, of course, you got the holiday season. This is not auguring well for Apple. And the last one was Disney. Disney is looking, holding really nicely. It had that beautiful left side, right side price time match in the monthly chart to try to test the previous all-time high of 122.08. Let's see, it's got another, is that December? Yep, December. It's got another 2 months to go to get to 122.08. I think there's a chance that Disney might be under the radar for a little bit in this market, mixed market. So I prefer this chart. I think it's looking very good. And if it does go to a new high, that's going to turn into a, cut this, stop. All right, this has got to, if it doesn't go to a new high, that'll probably be a leg C in the weekly chart. And that's what I'm looking at right now. But I'm calling it F for now, and we'll just leave it there. So parameters to watch is that Disney has to hold 112 in November, And if it can break above 118.50, preferably 100, if it can get to 120, that'll be really good action. All right, I did those because they're really part. That's important. You've got Apple, Diz, and what was the other one? Apple, Diz, and Berkshire Hathaway. So 2 out of the 3 are Dow stocks, and Berkshire Hathaway I'm going to do now because this is the United States economy. It has every single facet of the economy. Berkshire Hathaway, Buffett stock, had a real spectacular gap up today. It was trading at 206 on Friday. Now it's at 216. I'm still looking at this. My potential here is to say the upside might be limited. And I would not be surprised if it kind of fills the gap over the next week or two. And then over a period of November, it wouldn't surprise me to see it come back down to retest the 201, 196 area. If it does break to an all-time high to 225, besides being fabulous action, if that's an economic barometer, since he's in insurance, he's in banking, he's in rails, he's in everything. That'll be really good action. All right, back to our story. So silver is trading right now down a little bit, down 13 cents. I think it's 13, yeah, at $14.6625, $14.625. And I think it's just stuck in a range. I'll just keep saying it until silver starts to trade consistently in the 15.25 or higher area. I think this is just backing and filling in the lower range. Just nothing to see here, folks. Dollar was up earlier, then it was a little down. Now let's see where it is. It is down 3 cents, holding very nicely after the peak D. Left side, right side price time match in the cup formation. I've spoken that many times. For subscribers, we were following it based on the Chapman wave methodology. And right now, the weekly chart is the most important because the MACD is still slightly positive and the stochastics actually rallying. If they start to turn down, then the dollar becomes a lot more vulnerable, and 95.50 will become very important support. At 96.43 right now, this is pretty good action, and that monthly chart is really impressive. It doesn't say it's going to soar to the upside. It just says holding really well, steadily making gains. That's what you want to see in a currency. All right, let's get to high-grade copper. High-grade copper right now is down, $1.98. Not good action at all. And I've been putting this together with wood, which is WOOD, that is the iShares Global Timber and Forestry ETF. Horrible chart, as I showed my subscribers, I do every week. It had a real nice weekly gain, but the monthly and daily charts just, I'm sorry, it had a very nice daily chart. The weekly and the monthly charts technically are still very, very poor. And that's talking about copper, it's talking about globalization of commodities, etc. And if you look at HGX, which had a really nice first time break to the upside, that is the Philadelphia Housing Sector Index, holding nicely again, a peak A, potential daily. Weekly charts stopped dead in the 200 period moving average. It's just been, it's had weeks and weeks, 1, 2, 3, 4, 5, 6, about six weeks, actually 6 out of 10 weeks, it's been red, it's been lousy. So it deserves a bounce. I'm treating it as a bounce. Let me show you something that's even more important. Look at the TLT. The TLT now down, it was down sharply this morning. Now it's up 63 cents. I'm sorry, down sharply Friday. And it's up 63 cents right now, having hit 111.90. And just a week or so ago, it was in the 115s. This is saying that if there was, tomorrow's election is going to be, it's not just the election results, it is how are people going to perceive higher rates? How is the market going to deal with the higher rates? And will there be a bounce in the TLT to recover it in this Chapman wave arch formation, a close below the left side low, I should have typed that in, of 112.62 on the 5th of October, 112.62, 10, 5. You've got 2 days, maybe 3, in which to close above it. Well, we're at 112.60 right now. So if it closes above, it says you can rally to the next moving average of importance, or you can move to the next higher peak. Well, the peak is the high that was made in the 115s just 8 sessions ago. This is going to be very interesting. What happens to yields and how are yields? After all, look at the XLF. The XLF is holding pretty nicely. It's up today 37. This is the S&P Financials 2675, having made a low of 2502. This is $1.73. This is very nice action in the daily. The weekly is actually improving technically. In the monthly, doesn't look very good, but it's got that arch formation closing above the left side high of 2661, left side low of 2661. It's going to be very important this week. All right, we've got crude oil. I've done all these for the beginning of the week. Crude oil is up 23 cents to 63.37. That PG top at 76.85 on the 3rd of October has seen a whopper 13 points. Is that right? Yeah, 13 points. What is that, about 18%? Huge move to the downside. I'll be right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So the question here is natural gas. A lot of talk about natural gas having a huge spike. Why am I not able to do all that? Oh, that's interesting. All right, I probably have to just shut down and come back again. If you're looking at the natural gas, this is the weekly chart, you'll see that there's a cup. I'll draw it in like this. There's a cup formation coming, and we've spiked above the early January, February high that was around about 27 something, and it's at 28.52 on the UNG. I'm talking about the UNG. I wonder if I can do it on this, on the actual natural gas. Yeah, so this is EF/C. I'm calling this a leg C in the daily chart. I think this is actually a neater one to. Am I not able to do that? I don't know why. I'm not able to actually type on it right now in the different ellipse and arch formations. But you can see that at 3.5 up to 6.82% today, big gap up. The MACD is only at 76%. It isn't at 80. This to me looks more like a short squeeze just at the moment. The MACD is very good. Price is price, and the price is gapped and is holding really well. I'm suspecting that, being the winter time, that natural gas is actually moving up, that it's a combination today of some kind of news event. And what's really important over the coming, what's today, Monday, the 5th. So by the 8th, if natural gas has not pulled back to even touch the high, oh, it doesn't even have to do that, to touch even 3.34, it's at 3.50 right now, somewhere in the 3.34 to the 3.31 area. If it hasn't even come back that far, it just goes back to maybe 3.43, 3.45, and then bounces to a new recovery high. I would suggest to you that this is more than short covering. This is buying, and that it's really forming a very strong base in the 335 to 320 area over the coming months. That's going to be very important. Monthly chart looks really good, and it's improving a lot. All right, and I did natural gas, I did oil, did the TLT. What haven't I done? I think I've done everything. Okay, so the question here is a specific question, and Jason wants to know Apple. Hi, Basil. I hope you enjoyed your weekend. Yep, I did. Want to know if you would consider starting a long on Apple around the 200 EMA on the daily. If you have time on the show to discuss, that would be great. Thanks. Best, Jason. So, Jason, this is what I'm looking at. In Apple, the 200 period moving average is 196. I had someone I actually played tennis with the other day when Apple's earnings came out, and he said he put in a buy in like at 208, but the fact that it was very weak after hours, said, you know what, I'm just going to wait a little bit. I'd like to buy it. And I said to him, you know, think about it this way. Apple's had a spectacular move. It needs time. It doesn't have to have price. It could have price. I'm just saying it doesn't have to have price. It really does need time to re-energize. The whole holiday season's coming up. Apple always gets bought. People always, it's just an easy thing to do. You choose Apple products. So I don't think they should have a bad, maybe the season won't be as good as it has been. That's different because that's outlook. Then you've got the year to look at as well. You can't use the recovery of December sales to go into the first quarter, because if it's lousy, your first quarter could also be lousy. So what I'm really looking at here is to say, let's see how it tests things like the 200 period moving average of 196. To my eye, I see no rush in getting into Apple. I also would not want to dissuade you if it's been on your list. After all, we always say, oh, you've missed it. Wait until the next big pullback to make your consideration. This is that pullback. And I'm just saying to you, if it was me, I would maybe start different positions. And I'd say, I'm really looking at this huge candle, spectacular candle of, was that August? Yeah, August the 3rd. The low is 189, the high is 208. That's where we are right now, right? We were 208 just Friday. Now we're down in the lower range. That 189 doesn't look impossible because it's at 196. So it's actually right now 200. So this is what I'm going to say to you. Take your time, because even if it bounces, I think you're going to come back and do some retesting of the daily 200 moving average of 196. Just don't be in a rush. You can prepare it, you can select, you can say, you know what, I think Apple, for my long-term portfolio, Apple, especially with the price to earnings ratio, I suspect that Apple is, I called it ages ago, it's like the General Motors of the 1920s, where it was on the cutting edge after a certain period of time, and then it became a very mature company. This is now a mature company. Maybe you can even think of it as a dividend. I have to put a down arrow in the weekly chart, down arrow daily, down arrow weekly, nothing yet in the monthly. So I'm going to suggest, if you want, put in a buy, just a starter position in the 196 area, and just give it a little time. I don't think you need to be anxious that you're going to, I don't think you're going to miss out on anything. Even if the market on Wednesday and Thursday is up 700 points, pulling another November of 2016 stunt, I'm just thinking that Apple just needs time. So yes, I don't disagree. Good idea. You could start it in that area. Maybe you don't want to wait. Maybe it's 199. So you're 4 points away. I'm saying to you, if you want, if that's your posture and you were thinking of adding on big dips, maybe 20-point dips, so you start here maybe at 176 or 182 even, you could say, maybe I'll have another little position. That's the way I would look at it. It's had a huge move, just needs time. And remember, it had a gap up. If it gaps down in November below, and gives an island reversal in the monthly chart, that's very unusual to see. Really big candles giving a monthly turnaround. But in the meantime, yes, I don't disagree. I think it's fine if that's your stature, if that's your posture, I should say. Start your position. I just wouldn't get full, because if it rallies strongly, you can start to make the decision. Do I have a second position that I add higher? Do I wait? Those are decisions you can make peacefully without any of this crisis attitude that might occur Wednesday night, Tuesday night to Wednesday. Next question, XLI. Yep, the XLI. Let's see where that is. XLI. Yeah, I looked at this very closely over the weekend. I don't see the XLI. I think the XLI is a lot weaker than the Dow, because the Dow has a big mix. Look at this. All of a sudden today, Chevron. Boom, Chevron's up 4 points at 118.75. I might consider one of these oil companies as something that is a dividend play. Maybe, I don't know yet. You remember Verizon and telephone, I said, dividend plays, it's real tough because they have mixed characteristics. And it turns out that Verizon over a 3-month period would have been great because you would have got a dividend and a fabulous play. But yeah, look, CVX, look at the way it's acted. It's held the 200-period moving average. It's bounced off. And look at Mobile Exxon. Exxon Mobil. XOM. Got it, Exxon Mobil. Not as good a chart pattern as CVX. In fact, that's the one I would probably say I'd stay away from. Maybe Chevron's the one. We'll think about this. I don't think there's a rush. Just in terms of the E-mini right now, E-mini right, there it is. E-mini is pulling back. Make it simple. It's at 27.26, under 27.23. It's a problem. Over 27.32, it's good action.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. So we're back, and the Dow is up 93. S&P, so the Dow's at 0.37. The S&P is at 0.13 at 27.26, up 3.53, and the Qs are actually down. So this is a really mixed market, and that's the reason why I'm saying, as I went through all the different charts over the weekend, look, we got our peak E in the Chapman wave methodology. Remember, D, E, and F, we start to look for turnarounds. Over the years, there have been dozens of times we've shorted right at a D or an E in the Dow and got a really nice gain, but there's been such a powerful move to the upside that most of the time we took some profits. We never took the full profit because by the time there was a turnaround, the market had already rallied back up again. So the longs were really good, and the shorts, you had to just take profits quickly. This is the first time we're seeing that shorts can actually be held for a little bit longer, just a little bit. So on the 8th, that was the 8th, why did I put the 8th? On the 3rd of October, the Dow makes an all-time high. 26,951. We've seen the monthly chart, the 26,661 high of January. The MACD was strong, the stochastic was strong. This time they're just not strong. Well, I have seen before, there are times where it didn't matter because the market kept going higher. This, I think, has the potential to be a little different. Looking out, the daily chart gave a short signal with that doji candle on the 3rd of October at the close. Everything I did said, you know what, based on, I'll expand this a little bit. Based on the technicals that I use, the MACD was just about to turn down. The stochastic was way weaker. This is almost like the Dow monthly chart, this cup pattern. And then what happened was, at the open, oh man, all these people calling about the election tomorrow. They should not be allowed to. How do they get the right to make calls to us without our request? All right. So here we go. We've got a short right at the open at the highest 26,951, and about 100 and under 200 points later, the very next morning, because of the gap down, right at the open we're short, and it's short, and we get those two beautiful. Remember the Chapman right there? I wrote it in. Chapman wave Roman candles, techniques that I developed over the years, primary asset in terms of candlestick patterns that I've used back. Even if you remember the rally in the weekly chart, they went to a G in the October, the summer high, and then the October all-time high in 2007 gave us a beautiful candle soon afterwards. So here we are. We're looking at two Roman candles. Price keeps going down under the 9, under the 14, under the red 20-period moving average. We smashed to the downside in around about October the 9th, 10th. Goes down. And then we took a little off at 25,000. Why? Because that was our, look, here it is. The 200-period exponential moving average. That was our first target. Then it bounces sharply and comes back down. So we've taken a little bit off. On Friday, at the opening, after the spectacular move to the upside, I said, we're going short right at the open. And we went short at the open. Now, for subscribers, if you're listening, I reread what I wrote. I was perfectly clear in my mind. I'm not 100% sure that it's, I think it's clear, but only the part that you added back on Friday would be taken off if the position that we took, that particular stop that we have, if that's hit. Not the whole position. There's no way we're going to ever get that back again in this particular move. The exact, almost the exact top. I don't want to, I'm not touching that. That we're staying in for as long as possible. Even if there's a spectacular move on Wednesday, I'm going to hold that until I can make, we've taken some profits, we've taken profits either way, up and down, doesn't matter. I'm looking at this and I'm saying the weekly chart is most important. Now look, the MACD is just cross positive. That is usually a very good sign, but the stochastic is only at 66%. It really needs to be in the 80% for me to feel very comfortable. So far, I have to treat this as a potential for an arch formation. Even if there's a bounce on Wednesday, this is what I'm thinking. If it wasn't for the election on Tuesday, I would say, you know what? That short position that we took, because we tried twice to go long, took a little bit of a loss, right the day before the low, and then the day, I think it was the day after, we just didn't get it. I can't remember offhand. But most importantly, I would have said, okay, we're going to reverse course on any pullback in the next 2 days, because I think we're going to go to a leg B. This is a little different, and I just need to be out tomorrow for subscribers. We'll have a plan of action. I've found over the years that on those few occasions when I've had a position, a successful position in an intraday update, it's been spectacular because we just got it. If I didn't have that, I wouldn't have got it. The once back in 2007, I think it was, we went short intraday on an update, and it was just great. Most of the time, I found that, you know what, the next day you can get an even better price. I'm not going to get carried away. We've done our homework. We have a long position, which is this. We've taken some profits off that. Really nice position. I'm ready. I'm just ready, and I don't want to get carried away. This is a mixed market, and the market is saying there are some sectors that are in a, I don't want to use the word recession. There's a whole bunch of economic implications. I will say economic slowdown. I've been saying that rotationally for about 6 months now. I've been saying there are sectors like the home builders, like the semiconductors that are in a, you could call it a recession, but it isn't official yet, but they're in deep down modes. And that's the way I'm looking at it. I got a feeling that if it's a negative reaction on Wednesday, this could be the first time that those monthly charts are saying, you know what? Now we could start to talk recession, because the moment an economist says recession, it's pretty much over and we will be going along, something like that. That's the way it has historically been for me. We'll see. So let's just get that out the way. Now, it's a mixed market. You see the MACD cross positive in the daily, but wait a minute, look at this. You've got a rotation going on. When you go to the IWM, oh, I did not do the IWM, yeah, I did. The IWM, which held nicely on Friday, is pulling back today down $1.49, down 0.95%. And that's why I'm saying we cannot ignore the implications of weekly and monthly charts. The monthly chart is in a sell mode in the Russell 2000. Way under the 9, way under the 14-period moving average close. MACD negative. The stochastic 73%. So to repair that damage, a lot is going to have to happen in the IWM. It can do it. Sell mode doesn't mean to say you're going to keep going down forever. It just means the designation right now, based on the configuration, is that it is in a sell mode. That is the name of the characteristic. To say that it's going to go down and test this dashed trend line, I need other proof. And the weekly chart on Friday will give it to me. But I suspect that the IWM will test the monthly chart 143 key support in this dashed uptrend line sometime in 2018. I'll be right back. Dow's up 88, S&P's up 2.8. I'll be back. Basil Chapman, Tiger Technicians.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. So the E-mini has a peak D in the 5-minute chart, and it's testing the 22723's 200-period moving average. That's pretty critical. So a couple of things I wanted to go through. Yep, let's see. IY transportation up. Yeah, IYT is trading right. Yeah, IYT is trading down 43 cents, having gone to a leg. E, the daily is rallying. It's okay. The weekly is terrible, and the monthly is terrible. And that says the iShares Dow Jones Transportation Average Index has to do a lot of work, has to go from 186 into the 193s to really improve and start another big buy mode. The CSX, Buffett stock, is trading up 48 cents. It's made its peak. It's made its peak F in the daily, weekly at 76.74 back in, I think it was maybe August, and now we're trading at 69 after hitting 64s. That monthly chart is going to be very important, because if it manages to rally to 72.5 in the next 3-4 days, that's really good action. If it fails and it closes under 67.50, I think it's a problem. Next thing is Boeing. Yep, let's look at Boeing. Always look at Boeing. What was the question? Oh, it's just Boeing up 0.1. Yeah, Boeing is up 0.24% and up 86. I don't see anything here. I think Boeing is stuck for now. It's at 358. A close below 350 would really be a problem. Caterpillar is down 74 cents. That is a monthly. That is not a good sign at all. So Caterpillar at 125, better hold 119 support this week. Try for 127s, and that'll be good, but it needs more time. So now a couple of things that I want you to do is, yes, in the back you can see I've got my, if you get a chance to look at it, my CD introducing the Chapman Wave methodology. These techniques that I talk about, so many are discussed in great detail in that CD introducing the Chapman Wave methodology book. It's available at TFNN. I know it's a little old-fashioned, but the information, believe me, is not old-fashioned at all. So if you're an old laptop, an old computer, it's great. Steel Stocks SLX, let's do that for Coda in the Den. Steel Stocks, yeah, I just think they're consolidating. I think Wednesday is going to be very important for Steel Stocks. SLX is down 0.01. We'll talk about that again tomorrow. Have a great day. Stay tuned for Steve. Stay tuned for Dave and Tom O'Brien. I'll be back tomorrow.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.